problem on V25. Yeah, so let's see if we can actually have this chart with impact in between. So first thing first, we talked about V25 and we practically stated every single areas where the market should actually react from, right? And so there's reasons why it should react from this perspective. Now, first thing first, we've had price returned back to certain areas of what of discount and based on higher time frame, based on higher time frame institutional order flow, which is our last break of structure on the higher time frame as slated, right? From this perspective around here, around this, where we practically know that the market broke structure to the downside. We had ourselves rally back into point of interest, right? But we could not rally back into this area, but rather use the area of base because of this distance the market gave us, right? Now, lastly, we are still having price. We are still stuck within a range. Let's forget everything that is actually occurring at the left-hand side of the marketplace. Okay, the market reacted, came back to certain area of the inducement, swept it off. This inducement has been taken. I love a situation where we try to do a little bit of repeat on our analysis, right? Because that actually helps us to do a little bit of tracking or with tracking between price, understanding each institutional order flow. So the market actually swept this area, which is our primary inducement, swept it off completely with a week and continued to the downside, more like what we used to state. But the market is valid reacting from any area in the marketplace. So if the market reacts from any zone, it is valid. The only thing that gives us, so one of the things that gives us validation as traders is our confirmation, because the market is always right at every point in time. So a very quick one, market as we earlier slated, mitigated from what? From our POI primary inducement from this high, then we have our fair value gap above the marketplace on that inducement, primary inducement. Our primary inducement, likewise, and attached to it our fair value gap. Yeah. Then we actually stated as at the previous session that we needed the market to rally back into the zone. Yeah. And having the market reacted, you watch how the market came back to react carefully or reacted properly well on the POI that was marked. Think about the hour time frame or the 2 hour time frame. Coming. So now a very quick one. Likewise, we have our break of a structure. Yeah, a break of a structure. Remember, I likely stated that we actually want to do a little bit of tracking on every single analysis. Yeah. Now we had price mitigate from our what our fair value gap, gave us a very quick reaction. Then we sank to the downside and gave us a break. Now this break validates that internal liquidity has been taken, area of inducement has been grabbed, and we've gotten validation for that case scenario, right? Now, likewise, we now know that after this break of a structure, every other thing that forms is what we call range structure as usual. Now, if you also check carefully, the market gave us a proper break of structure. But the question here is that was the market expected to use the area of breakout to continue this move? Right? Let's still consider the week during. Okay, so the market used the area of this breaker, right, before this quick sell to the downside, which is this quick sell to the downside that is considered as what? As our range structure, right? So now we actually expected buy case scenarios, I mean sell case scenarios from this perspective, but we've not actually had the confirmation. I think we also stated it on the previous section here that the market is extremely valid from any area it's actually was going to be mitigating from. All we just seek is a confirmation. So there is no need forcing the trade because actually I was actually on the sales around there, then actually stepped out when the market gave us this um range. We had this range into this mitigation. What I practically needed was an impulse below this low, here on the lower time frame, to give us a proper break. Because once the market reaches this low, that I just marked should have been considered a break of the structure. So that was just a reaction zone we actually played around with, right? On B25. A very quick one. We move over to 1 hour time frame. Now, still noticing on the 1 hour time frame. So I don't know what's actually your take on this, because first thing first, there's a possibility that the market can actually even still have this high swept properly, because this could also be even considered an inducement for us to return back. But anything above this high is a break automatically. Anything above this high is a break automatically to sweep everything sweepable. What do you say?
All right. Apparently, in as much as, we are considering that market might sweep this particular high, this intermediate high. However, it is very necessary for us to also look at the right-hand side. The structure market is creating at the current right-hand side,
Mm-hmm.
and see where or possible areas whereby market can actually break that will confirm us that we want to go in a downtrend, because the impulse market is currently making is showcasing to us that since we want to have some buy momentum, you can see that we have some buy momentum. And if you also check the 24 hours time frame, it is giving us that buy momentum. You can go to
Mm-hmm.
24 hours time frame and then um let's see that 24H.
Yeah, and price wasn't actually supposed to mitigate from this week.
Exactly.
Price can't actually hold it. Yeah, you can't actually
Now,
hold price. Yeah.
even if we break that eye, right? If we break that eye, it is approaching. Personally, it's a break of structure for me. That current eye, it is approaching on
Mm.
this 24 hours time frame. And apparently, the reason I am saying that is because you can see that every fair valid gap has been properly
Have you
mitigated.
mitigated? Mm-hmm.
Right. So, and if you check through on this 24 hours time frame, you can see that every lows that was broken for market to come back to this PO high, they were not major lows. And also we did not have a good sweep to the downside. I think permits me to share my screen so that I can, give explanation on
Be
that.
more flexible, I guess.
So just give me the permission. I'll load up my charts now. Some seconds, please. Yeah, we actually had a sweep of the low. I am trying to load my charts up, please. Just give me some seconds. Some seconds, please. I'm still here. I want to load up and then do some settings so that I'll be able to show my screen. Some seconds, please. I'm still here. Can you hear me clearly?
Yeah, certainly.
Very beautiful. So, permit me to share my screen. Okay. I'm sure you can see my screen now.
Yeah, very well.
All right, beautiful. Thank you. So, um, as I was stating, you can see that over here, we actually had a sweep and not a proper break. This was actually a sweep to the downside, right? Not break it with, a body candle. We only
Yeah.
swept it. However, market sweeping just slow. We are not expected to actually break this high or come back to this area. We are supposed to use that range structure continuation to the
Exactly.
downside. So, and also, since it was just a sweep, we're not supposed to come to up to 80%, right? Now, if we now check the 4 hours time frame, checking on the 4 hours time frame, you can see that all of these lows that were broken, this low, this, they were not majors, right? The only low that would have been broken to confirm us was this other low, this particular low that would have confirmed us that, oh, market
Exactly.
continue to the downside. So
Exactly.
was not broken. So market reacting at this particular area is actually very valid, right? And since this is valid and on the 8 hours time frame, this high it is approaching is very visible. So we will actually classify it as our change of character, right? We'll classify this as our
Yeah.
change of character. You know that this is actually an internal structure. This is an internal
Exactly.
structure for us. So markets just breaking this high actually creates a change of character for us for a continuation, in as much as this is the major internal structure that we should actually break, right? This is the major we should actually break around this area. But in as much as
Yeah.
we are forward to this major, this impulse that we are giving here, we classify this particular high as a change of character for us so that we could actually look for continuation areas to the upside for us to, target the next high that market is looking forward to. So I think that is just my take on volatility 25.
Okay. Okay. That's actually fun. I think what we just have to need do is practically waiting for a series of confirmations. Yeah.
Mhm. I can barely hear you actually.
Comment. Okay. Now, looking at here, based on the previous concept, Ket actually gave us a shape, right, which is with momentum, and which is
Mhm.
well considered as our POS initiation. We happen to see this as a range, which is this perspective. So we have what we have initiation, then we have what our mitigation over here, right, which we could actually have even that valid what we call range range initiation, which is range initiation, then mitigation, then for the continuation. So the continuation is what we might even likely be seeking for, right? So the market, as you said, is extremely valid. So we are extremely good to go on V25.
Exactly.
We're only going to put our hands crossed to make sure that we watch.
Exactly. So let's go
So
in
I think that's enough
other
for V25 now. Yeah?
assets.
Okay.
Let's look into another asset. So let's go to volatility 100 1S. I think you would have to share your screen right now. You can go ahead. Okay, your screen is showed.
Okay. So I believe we've actually done analysis of V100S1 or V101S before, yeah?
Yeah, sure. Mm-hmm.
Okay. So now, if I could vividly remember, I will probably state that we actually made a recall of stating on the fact that we actually need the market above this area of inducement. We
Yes.
need the market above here. right? And we have certain areas that wasn't actually on the marketplace. But my own perspective, our perspective is seeking the market above this induced area, right? Above here, above the 689 level, and above this level equally. So the market is currently giving us a series of mitigations. Now, how is that? We consider our break of a structure from both sides. We have a break, the market mitigated from what? From the OB, right?
Yes.
So market gave us proper clean or clean what mitigation into areas of imbalance and our SC candle, yeah? Areas of imbalance and our SC candle. So which extremely well have been playing out, giving us good price action in between. A break of a structure gave us a hunt of liquidity, which is this, right? The market created a low, created a high that failed to break structure. We came back to read it and mitigated properly into what? Into points of interest. Now, after that, the market gives us a validation stating that we have raided what? We've raided hunt, we've done hunt of liquidity, we've mitigated POR, which is our major POR. Now, a very brief one. After that, the market still had to give us areas of internal liquidity where the market could come back to grab and continue, right? So area of mitigation. That is to state that what that if the market comes below this low, yeah, because each time the market strips liquidity, you don't expect the market to come back there again, right? So if you ship it, automatically gives us validation. So for now, which is this, we've gotten extreme um validation that what that the market has swept what area of fair value gap, a break of a structure has occurred. Then what we need now is our structure, which is continuation till this thing is taken. So it's a continuation that we're looking for. So I will have to dive to the lower time frame. We've gotten what we. So let's break it down to it as. Okay, I used to love structures like this because it's quite interesting. Very, very interesting. Yeah, very, very interesting. So now a break of a structure. Then we had this, remember fair value gap here. We have this OB, which is our SC candle. The market actually properly mitigated from, but rather the week in between. Okay, so now what the market is doing here. The market is giving we have this reaccumulation, a reaccumulation phase to continue. But likewise, we'll still have to make sure we use our main concept, understanding the areas of majors, because that's actually one thing that gives us a very strong bias, strong reason to want to continue or to do a continuation, right? Either to the upside or to the downside. Now, for our time frame, it's not still clear, not still clear. All I can practically see here at the moment is this low being haunted. Yeah. After that low being haunted, what I can actually see is a break of a structure through. Yeah. Abi. So the rest is what we need to investigate through. So 1 hour time frame. Now on the 1 hour time frame, this is actually something quite simple. Now, first thing first, watch this because we always have to make sure we take note of every single zone. Yeah. If you took the lower time frame, we have a low that was what that was haunted here on, let's say, probably 15 minute or 5 minute time frame that was haunted along this week, making it a major for this continuation, for this continuation here, one, and this continuation and this continuation. Okay, and we have this, as you can see, we have this. The market gave us a sweep above this high, right? After giving us a sweep above the high, then we came back to form an inducement for the range, right? Where the
Yes.
market now comes back to grade, gives us a break of structure above the high. Then we came back for an inducement. This is the high to validate that what we've gotten a break of structure, that this low is a major low. Abi,
Mm-hmm.
which Abi.
Yes.
So we now consider this a break of structure to validate this low below here. So this low here is our internal liquidity, abi, our internal liquidity. So now, for us to validate this internal liquidity, we now need this high to also be what? Be broken. Be what? Be broken. So we've had all this. That's let us know that we've had all this area mitigated. All this area mitigated. So now let us check the pure. Let us now check where the market now is writing from. So we are now done with 1 hour, right? We now know the bias now, what the market is now doing from each of these continuations around there, the marketplace. So let's see. Okay, so first thing first, the market ought to what? To react from this area of this candle, right? But we gave in this gap, Abby, or we feel the balance in between. So looking at trades like this, might even have just probably just have a continuation by to this high stick. So, but let's see go to lower time frame, because what we're looking for is a clear price. The price action is actually very clean. Very clean. Imagine. So imagine this. uh, look at this. So look at this. Quite very, very impressive. We have this candle, which is our interest candle.
Candle. Mm-hmm.
All right. Our area of interest. Right? See how the market mitigated. True. Now we will have to consider this. Our main area now is these mitigations here to know if this place is valid, because you see the market is reacting from even a valid POR here. Likewise, yeah, Jerry. Now, so as I used to say, or as we used to say, the market have every right to what to mitigate from any POR. All just need is a confirmation. So a proper mitigation, we now have to read through or study through. But what we want to do is to investigate through. So first, where is our proper break or structure? That is number one. Proper break or structure. Our proper break or structure. Right? This is one. All this, the market, this is in our internal, all true. Then add this area mitigated through. We have this, but we have this. If you want to consider liquidity, left for me on price actions like this, I would rather say we should practically wait on this lower time for a very clean confirmation, right? For us to continue that buy move. Okay, let's see. Oh, I see. Oh, I see. Okay. Okay. Look at this. Look at this. See what happened. Understanding the lower time frame is very, very interesting. Now, this, right? This, right? Validation.
Yeah, sure.
Then we swept through. You see, could not even sweep this low off.
Mm-hmm.
You couldn't sweep we couldn't sweep it off. We now did our break or structure to validate to continue, right? Now we have this. We have this. Now, since we've now had this low swept, what do we now think? We now expect this area to what? To play out from
Exactly.
this.
Mm-hmm. Mm-hmm.
So, should we say we've gotten an area to continue?
Absolutely. Absolutely.
So for me, I have to still expand it to this region. Then consider the higher time frame.
Great.
right?
Mm-hmm.
That high. I think we're actually on track.
Absolutely.
Okay, so any that thing again?
I think we should just look at probably volatility 50, right?
Okay, 50. What is this lower time frame structure kind of impressing me? Okay, okay. B50, 8 hours, 24 hours. I think we still have this load to be taken. We still have this load to be taken actually. Have you?
Mm-hmm.
Better still, the point of mitigation, yeah. Our point of mitigation is from this candle. This. That's our point of what? Mitigation. Our point of mitigation. Right together.
Yeah, sure.
So I still think we still have long moves to the downside. So we're still in check. The ship on inducement, hunt of liquidity, we come back hunt, and we continue break of a structure. The low visibly seen as what? As our um primary what? Inducement to continue. So we
Mhm.
still need the market to see below it, then give PR before we continue. So I think what we'll now do is to mark it just like what we did on V75S. So then we have this. I think this is quite okay.
Yes, sure.
We still have this. Okay, come on. Okay, so I think we're good, right? On V50.
Yes, absolutely.
Then what we just rather have to it is lower time from later on. Let's see V75S. I think V75S so far so good has actually been playing out well. And we're actually on track with it. Let me see. It's not clear now. Return back. I think we should save this equally. Okay, so
I think we're good to go with the trade, right?
yep, yeah. Okay, so I think for those actually swimming in profits, they should start sending their tithes. Abi?
Mhm.
Okay, anyways, that's actually that. 24 hours, we have 8 hours. So all we're seeing just here, all we are seeing is just buy continuation, that's finished. That's just all. Apart from that, we have fulfilled our obligations on this thing. Because I actually remember when we actually looked at this law specifically for us to read, not even this candle. So so far so good. We are actually playing out. And our main target is this high long term, and that's that. Okay then.
All right. Thank you very much.
Think we're done.
Amazing day ahead.
You know.